Welcome back, guys. Another week has flown by, closing out yet another weekly candlestick. In today's video, we're diving into two stocks that have broken out horizontally and three that have finally surged past their prolonged downtrends. Stick around till the end. There's a lot to uncover. Now, before we get into those picks, let's take a quick look at how the broader market performed this week. The Nasdaq was up 2.05%, the S&P 500 gained 1.2%, and the Dow Jones rose 0.9%. Not bad, right? But that's not all. We also had a Fed meeting this week, and as expected, interest rates remained unchanged. The next meeting is in March, and while we're anticipating two rate cuts in 2025, inflation is still a wild card. Will we actually get those cuts? Well, only time will tell. Before we dive in, remember these stocks are best suited for short-term swing trades, mainly driven by technical charts with just a touch of fundamentals for added context. This isn't investment advice, just educational content. All right, let's start with the first stock on our list today. The chart I have pulled up is on the monthly time frame, meaning each candlestick represents an entire month of price action. So what you're looking at is decades of data in a single chart. Now, let's analyze what's happening here. This stock made a high of $88.50 back in December 2010. Since then, attempted to break through this level once in 2020, but the COVID crash prevented a successful breakout. Fast forward to October 2024, and we saw another attempt, but again, it failed to hold above resistance. Finally, this month, by the end of January, the stock has managed to break out of this key resistance level after a long wait of nearly 15 years. That makes this breakout very significant. Now let's check some technical indicators to gauge the strength of this move. The stock is currently trading comfortably above both its 50-day and 200-day EMAs, which is a strong bullish signal. This breakout could lead to a sustained uptrend, but waiting for a retest of the breakout level could be a safer approach. If the stock consolidates and holds above this level, it could confirm the breakout and open the door for further upside. A quick note about timeframes. Since this is a monthly chart, if you plan to trade this setup, you'll need to think long-term. Higher timeframes require longer holding periods, so be mindful of that when considering a trade. Now, let's talk about some historical drawdowns. After hitting resistance in 2010, the stock saw a deep 75% correction. During the 2020 crash, it dropped around 58 to 60%. If we apply similar correction percentages from the current breakout point, it could give us potential upside targets near $155. But just to be clear, this is not a price target, just an observation based on historical price action. Lastly, one fundamental factor to consider. This is a Canadian company, and with President Trump expected to impose a 25% tariff on Canada, this could impact the stock's future performance. We'll have to see how that plays out. For now, though, the chart looks very bullish, so keep us on your watch list and let's see how it develops. The name of the company we just discussed is Agnico Eagle Mines, AEM. This is a large-cap gold producer operating across North America with a market valuation of over $46 billion. The company specializes in gold exploration and production and runs several mines across Canada, the US, and Finland. Their business is split into three segments. The northern business, which includes major mines like LaRonde, Goldex, and Meadowbank. The southern business, which covers operations in Mexico, and an exploration division looking for new opportunities. Now, let's talk fundamentals. Agnico Eagle pulled in $7.82 billion in revenue, turning that into just over $1 billion in net income. That gives them a profit margin of 12.86%, which is solid for a mining stock. Their PE ratio stands at 46.42, meaning investors are willing to pay a premium for their earnings. They also offer a dividend yield of 1.72%, adding some passive income potential. With gold prices on the rise, this breakout could be a promising one. All right, now let's move on to the second stock for the day, which has given another horizontal breakout, similar to the pattern we just analyzed. For this stock, I have pulled up the weekly time frame, so each candlestick represents a full week of price action. Now let's break it down. This stock made a high of $2.70 back in October 2022. Since then, it has attempted to break this level multiple times, once in April 2023, again in July 2023, and most recently in January 2024. However, this week, by the close of the weekly candle, we finally have a convincing breakout. So in total, this stock has taken about 2 years and 3 months to break out of this resistance. Not as long as the first stock we discussed, but still a prolonged consolidation before this move. Now, let's take a look at the exponential moving averages, EMAs. The stock is trading above its 50-day EMA, which is a positive sign. However, it is still below the 200-day EMA, which currently sits 22% above the resistance level, or about 18% from the current market price. So that's something to keep in mind. Now, let's switch to the daily time frame. I've zoomed in to show you something important. On January 29th, the stock broke out of the $2.70 resistance. On January 30th, we saw follow-up buying, which is a good sign. But here's what I really want to highlight. On January 31st, the stock pulled back, but notice the long wicket formed from the bottom. Also, look where it made its low, right at or just slightly above the 270 cents mark. Why is this significant? Because it's not just us watching these key levels. Big institutional players, hedge funds, and traders with deep pockets are also closely tracking these breakout points. The fact that the price reacted so strongly around this level suggests that there's strong buying interest here. That's why I always emphasize entering at crucial levels. This is a mid-cap financial powerhouse based in Colombia with a market cap of $1.06 billion. The company operates in banking, asset management, and pension services through its subsidiaries, including Banco de Bogotá, Banco de Occidente, and Banco Popular. Grupo AVAL plays a crucial role in Colombia's financial ecosystem, making it an interesting pick in emerging markets. On the numbers side, Grupo AVAL brought in $11.62 billion in revenue, translating to $202.83 million in net income. However, their profit margin sits at just 1.74%, which is quite low for a financial stock. Their PE ratio of 16.39 suggests they're trading at a reasonable valuation, and for income investors, their dividend yield of 4.44% is definitely worth noting. All right, now let's move on to the downtrend breakouts we had by the close of this week's candlestick. We've got 3 such stocks, and we'll start with the third stock on our list today, ETNB. I've pulled up the daily time frame, and here's what we see. This stock made a high of $22.93 in June 2023. Since then, it has been in a prolonged downtrend, facing multiple rejections along the way. March 4th, 2024, November 11th, 2024, December 2024, where it came very close to the trend line again. So this downtrend resistance has been quite strong, rejecting every breakout attempt until now. On January 27th, ETNB finally broke out of this trend line. After the breakout, the stock retraced. But here's the key point. It found buying interest right at the trend line it just broke, which is a strong technical confirmation. Let me zoom in to show this clearly. The breakout happened, followed by a retracement. Buyers stepped in right at the breakout level, indicating that the trend line is now acting as support instead of resistance. This is a bullish sign, and we'll have to see how the stock behaves next week. Exponential moving averages, EMAs, a strong technical signal. The stock is currently trading above both its 50-day and 200-day EMAs. The 200-day EMA is now acting as a support, which adds further strength to this breakout. So right now, the stock has 2 key support levels. 1, the trend line it just broke out of. 2, the 200-day EMA acting as support. The next major resistance is at $10, which is exactly where the stock saw a sell-off after the breakout. Only if this $10 level is broken, we can expect the momentum to continue higher. One more important level to note, this stock has been finding solid support at $6.70 since 2023. If we draw a support line, you'll see that the stock has respected this level multiple times, making it a strong base. Final thoughts, this stock has finally broken out of a stubborn downtrend, successfully retested its breakout level, and is now supported by the 200-day EMA. However, to see continued upside, it must break through the $10 resistance level. This looks like a promising setup for the next few weeks. The name of the company we just discussed is ETNB. This company belongs to the healthcare sector. Now let's look at its operations and fundamentals. ETNB is a clinical stage biopharmaceutical company focused on developing and commercializing innovative therapies for liver and cardiometabolic diseases. The company's lead product candidate, pegozafermin, is being developed for conditions like non-alcoholic steatohepatitis, NASH, and severe hypertriglyceridemia, SHTG, both of which are areas of high unmet medical need. This is a small cap stock with a market capitalization of $1.1 billion. Since it's still in the development stage, the company hasn't generated any revenue yet and is operating at a loss, with a net income of negative $288 million. Naturally, there's no PE ratio or dividend yield at this stage. As with most biotech stocks, this is a high-risk, high-reward play, and its future depends largely on the success of its drug pipeline. All right, now let's move on to the fourth stock for the day, which has also given a downtrend breakout. Looking at the daily time frame, this stock made a high of approximately $123 in December 2023 and has been in a downtrend for nearly 1 year and 2 months. However, on January 30th, it finally broke above the trend line, signaling a potential trend reversal. Although there was a slight pullback last Friday, the stock managed to close above the breakout level, which is a positive sign. From a price action perspective, the $71 mark has been acting as a strong support level, holding the stock's price from falling further. On the upside, the next immediate resistance appears to be at $81, which could be a key level to watch. Additionally, the stock is currently trading above its 50. It remains below the 200-day EMA, which sits about 8% above the current market price. This 200-day EMA has previously acted as a strong resistance multiple times, rejecting the stock's price on at least 4 occasions. However, all those rejections happened while the stock was still inside the downtrend. Now that the trend line has been broken, it will be interesting to see whether the 200-day EMA continues to exert selling pressure or if buyers can push the stock past this level. For further upside, the stock needs to break through both the 200-day EMA and the $81 resistance level. If it manages to do so, we could see momentum pick up for a stronger upward move. Keep this stock on your watch list, and let's track its performance over the next couple of weeks. The name of the company we just discussed is NKE. This company belongs to the consumer cyclical sector. NKE is a global leader in sportswear, athletic footwear, and apparel. With its strong brand presence, innovative designs, and worldwide reach, the company dominates the industry alongside a few key competitors. It operates across multiple segments, including direct-to-consumer sales, wholesale partnerships, and its ever-growing digital platform. This is a mega cap stock with a market capitalization of $113 billion. The company generated $49 billion in revenue with a net income of $4.8 billion, translating to a profit margin of nearly 10%. It currently trades at a PE ratio of 23, with an EPS of $3.24. Investors also benefit from a dividend yield of nearly 2%, making it a solid long-term investment for those looking for both growth and stability. Guys, every week I share at least 3 videos discussing stocks at crucial levels. Before we move any further, let me remind you, your comments and subscriptions not only help boost the channel's reach, but also inspire me to keep going. The fifth and final stock for today is GSBD. And I won't go into too much detail since its chart pattern is similar to the ones we've already discussed. This stock started its downtrend in July 2024 and followed that trend until it broke out on January 27th. However, on January 29th, it briefly closed below the trend line, which could have been a fake out. But in the following sessions on January 30th and 31st, the stock managed to close back above the trend line. And on the weekly time frame, the breakout remains intact as the weekly candlestick closed above the trend line. One key point to note is that the stock is well below the 200-day EMA, which is something to be cautious about. As for immediate resistance, 1325 is the level to watch. And if the stock breaks above this, we could see further upside. That wraps up the 5 stocks for today, and I hope you found the analysis useful. Before I close, I just wanted to mention that I recently uploaded a video on stocks that are at support and retesting their breakouts. Unfortunately, it has been my worst performing video so far, with just around 190 views, despite the significant effort I put into making it. For those of you who haven't watched it yet, I highly encourage you to check it out. Some of the stocks discussed in that video have already made strong moves, but a few are still at very attractive levels. Your support in watching that video would not only help you identify solid trade opportunities, but also help grow the channel. I truly appreciate it, and thank you for being part of this journey.